Zurich Insurance. Ticker symbol is ZURN. It's based in Switzerland. Current share price is 408 francs per share. It pays a dividend once per year, and the last ordinary dividend I received was for 13.22 francs per share, and the last return of capital I received was for 1.65 francs per share. So Zurich is a global insurance company, and it operates in about 210 different countries and territories, so it's completely global. It's about as global as you can get. It was founded in 1872, and I started my position on the 23rd of July of 2021, and since then I'm pretty much flat. My position itself has lost 5.96%, and the foreign exchange impact from euros to francs is the exact same amount. So between the two of them, I've broken even. Now, when you look at this graph, it looks like after the lockdown drop, it has recovered back to where it was, but this graph only goes back to 2019. So if you look at the long-term graph, it gives a much more accurate picture of what has happened. This goes back to 1995, but we'll get into this long-term graph in a couple of minutes. So Zurich and its subsidiaries provide insurance products and related services. And the 5 segments of the business are general insurance, which is your car, your home, or your personal belongings. There's also global life insurance, which is kind of self-explanatory, life insurance. There's a farmers segment, and this provides certain non-claims administrative and management services to the Farmers Insurance Exchange, the Fire Insurance Exchange, Truck Insurance, and their subsidiaries. There's the other operating businesses segment, and this is for financing and holding within Zurich. And then there's the non-core businesses segment, and this is for insurance and reinsurance. So at the moment, they have about 56,000 employees. They're one of the largest insurance companies in the world. Their current market cap is 60 billion francs. They have a PE ratio of 11.15, current revenue of 66.14 billion francs, an earnings per share of about 36 francs, and a current dividend yield of 5.5%. But they only pay a dividend once per year, which is quite common among European dividend stocks. Just something to keep in mind. So it only gives their net income here, which was 5.2 billion francs, but as you can see in this little segment, things appear to be on the downside, which is kind of the running theme at the moment. Europe has been hit pretty badly. The UK is following suit, and I've seen a lot recently about the US falling into a recession within the next 12 months. So fun times ahead for all of us. Zurich has an annual debt to assets ratio of 91%, very high, and its quarterly debt to assets ratio is about 93%. So this is very high. They owe money on pretty much all of their assets. Their annual cash flow from operating is 3.17 billion francs, from investing is negative 2.89 billion francs, and from financing is negative 2.29 billion francs. Now the long-term history. On this part of the long-term graph, we can see the dot-com bubble, which was in 2000. And then in about 2001, it fell from about 700 francs per share down to 95 francs per share in 2002. It's quite a scary drop. The next bit of history we have here is the 2008 crash. And it appears that it was already on a bit of a downtrend in 2007, and then it fell all the way down to 130 francs by 2009. And just to kind of give you a perspective, this little blip here, this is lockdown. And you can see it on most long-term graphs. It's an absolute disaster area. But the scale that this fell in 2000 is astronomical compared to lockdown. So they have a current 52-week high of 461 francs and a current 52-week low of 376 francs. So it's kind of smack bang in the middle at the moment between those two. The long-term history is not particularly exciting, and it only pays a dividend once per year. So I know a lot of people would like as much dividend payments as possible in any given year, but with this you will receive the full 5.5% dividend yield once per year. And there is a couple of special dividends which are always nice to see. These are just bonus dividends that you weren't expecting. So by no means very exciting. But to be honest, I wouldn't really worry about any of the money that I put into them because they're such a massive company. And nothing is too big to fail, of course, but they operate at such a global scale and offer quite a range of products in the insurance space that I wouldn't worry about them going to zero. However, I think it's bad times ahead for everybody. So it's not a particularly exciting one overall. The debt is pretty bad. Profit margin was not given, and it only pays a dividend once per year. So out of all of my positions, it would be in the not very exciting category. But they can't all be fantastic dividend stocks, and it is important to diversify. So I'll be interested to see how they do over the years.